Hey guys, welcome to the apartment investing journey. I'm David Robinson here with my amazing co-host, Mr. Dane Hill. Dane, how you doing?
Doing great. It's good to be here.
Good. So I'm super excited about our guest today. I ran across our guest as I was just researching apartment investing. In fact, I think I was researching how to underwrite apartment investing deals. And this guy was all over the internet, and there was a headline that just shocked me that I read, and I was like, wow, I got to connect with this guy. And so without further ado, Mr. David Toupin, welcome to the show, man.
Dude, what's going on, man? Thanks, Dave and Dane, for having me on here.
Yeah, our pleasure. So David's on the road actually working on a project. He had to head out to Texas last minute to deal with some challenges on one of his apartment buildings. And so we appreciate you. I know it's a challenge to get these things worked in, but appreciate you doing it.
No problem. These are fun. Love doing them.
So David is a top millennial investor, speaker, and entrepreneur. He has a background working in corporate auditing and investment banking, and has actually been a serial entrepreneur since the age of 13. He earned a bachelor's degree in finance from the University of Detroit Mercy. He is the co-founder and partner at Obsidian Capital, which focuses on large multifamily acquisitions. And this is the headline that caught my attention. David had acquired, actually before you partnered with your partner and founded Obsidian Capital, you had already acquired over 500 units worth nearly $40 million at the ripe old age of 23. Is that right?
Wow, that sounds pretty good when you say it. Yeah, no, some of them were with my current business partner.
Gotcha.
About half, but before that, yeah, it was about two something.
Great.
Kind of on my own.
Well, if you don't mind, take a second and just tell us a little bit more about yourself, just so that we can get to know you a little bit better.
Yeah, I guess I consider myself somewhat of a deal junkie. I fell into real estate mid-2016. I was doing a couple of corporate internships in investment banking, auditing, and just realized that I needed to go back to my roots. I started my first business when I was 13. I was mowing lawns in my neighborhood, and I had kind of built up a little business throughout my neighborhood and had a big zero-turn mower and the whole shebang. So,
the real thing.
Yeah, the real thing, man. So I loved it. I loved working for myself. And then when I realized how much wealth that you can create in real estate, just meeting some people and seeing what could be done, I caught the bug. And it was when I read Rich Dad, Poor Dad, when it was, I have a very financial brain. It just made sense. It's like, why wouldn't I do this, So I started getting into it. I started like a lot of people, single family, fix and flip wholesaling. I had a couple local mentors in Michigan where I grew up. And really quickly just decided that apartments was the way to go. That was the way that I could scale, create, a big business and hit the goals that I had. So I jumped right into apartments.
That's awesome, man. So aside from the real estate stuff, what are your hobbies, interests? What do you do right now aside from digging into the real estate business?
Well, I kind of consider real estate a little bit of my hobby. I love it so much. But other than that, I actually just moved from Michigan down to Austin, Texas, like a week ago. And that's where my business partner, Glenn Gonzalez, lives. And we had been working together for a while, bought a couple properties and decided to, partner up on our whole business, Obsidian Capital. So I moved down, and so now I'm just kind of exploring Austin and getting a lot of great food, checking out some cool places, hanging out on Lake Travis, all that.
Cool.
Yeah.
All right, man. Well, let's dive right into it if you're okay with it. I really want to cover today this 96 unit complex that you house hacked at the age of 23, and that I believe you currently and still self-manage. Maybe you've moved on from that, but I believe you're still managing.
I do. Yeah, I do.
Tell us about
self-manage it. So that was a really interesting one. Before I bought this property, I bought two other multifamily properties. They were both 12 units. And for those, I had to raise maybe like 160, 175,000 each to buy both of those. And I self-managed those. I had a partner on those that helped us get the loan and whatnot. And then I started thinking, I got more confident. If I could do 12 units, 24 units, I could do 100 units. So I started sending mailers out to people that own bigger properties locally in Michigan. And I happened to send one to the owner of this property, which is called West Oaks. And he was 70 years old. He owned over $1 billion in real estate, mostly locally. He had just been in the industry forever. Not syndicated. Like I think he owned like almost 4,000 apartment units free and clear on his own. So this guy is like old money, very successful. And I connected with him really well, just from a mailer that said, "Hey, I noticed that you own this apartment complex and I'm interested in buying, give me a call." So he called me, we built a good relationship, and I think he just liked me because I reminded him of myself when I was younger, or when he was younger. And so he gave me a shot, put it under contract, and then the fun really started because I had to go from raising $175,000 on this little 12 units to 1.7 million on this property. And that was to date probably one of the hardest things I've had to do in my real estate career. So I can dive into any aspect of it. I mean, do you want me to go over the numbers of it, what we did to it? What's
let's,
important for your viewers?
If it's okay with you, let's maybe start at the beginning. And let's talk about the thought process that you had when you were moving from 24 units and then said to yourself, you know what, if I can do 24 units, I can do 100 units. And what was that? What was going on in your mind, in your life at that time that caused you to be able to make that jump mentally?
Yeah, I guess I never really noticed this until probably the last year, but I none of that stuff really scares me because I think it's all just numbers, right? If the numbers seem to make sense on the financials of a property, income, expenses, where I can get the rents to, all that, the debt, if that makes sense, there's no reason I shouldn't be able to go out and raise some money and pay investors a good return. So, I guess the hurdles there are, how do I get the loan? Okay, if I can't qualify for a $3.5 million loan, I need to go find someone that can. So that's what I did. I went and found somebody. If I don't have the connections to raise $1.7 million, I need to make those connections, do some cold calling, and start kind of hustling and finding people that have the money. And for me, it was just a function of putting all those pieces together and then running after them. So I wanted to scale my business quickly. I had some really big goals, and I knew that the only way to get there was by just going bigger. So 96 units, I had the shot and I took it.
That's great. I'm interested in why you went to apartment buildings right from the beginning. A lot of the investors out there, young guys that have good income, they tend to gravitate early on to single family or even small multifamily. What was it about the bigger apartment buildings that caused you to move directly to apartment buildings, or did you start with smaller stuff first?
No, I started smaller. So my first couple of deals I did in real estate were all wholesaling. I did a couple small flips, and I knew that probably over the first 24 months, I can make a lot more money wholesaling and flipping. I would have probably made a lot more money. I ended up in my first year probably making like $25,000. My second year, I might have made $40,000, when I started getting into apartments more. But I knew in the long run, it would pay off by going into apartments. And I just knew that, going for the sweat equity in a deal long-term, it's going to make me a lot more than the short-term wholesaling and flipping might give me. So looking back, I have zero regrets. I would have made a lot more money in my first 2 years, but I'm going to make a lot more money year 3 now than I would have ever made year 1 and 2 combined. So it was just a patient game for me, and it interested me more.
So you connected with this owner of this 96 unit through direct mail, which, there's a lot of discussion about whether direct mail is still working today or if you need to go more digital. There's a lot of different strategies, but I know that the listeners are probably interested to hear what was on that piece, that mail piece that caused him to respond. Dude,
it was so simple. It blows my mind that he responded it to this day, but it just literally was like a very, just kind of like a corporate letterhead the logo, address, and then just said, hey, I'm interested in purchasing apartment buildings. I noticed that you own property at ABC address. If you're interested in selling, I would love to take a look at it. If not, hang on to this and call me in the future. And he just called me from, I think he called me from Miami. I don't really know who the dude was at first, but the more and more I learned about him, the more and more I realized, like, wow, this dude's like a billionaire. And there's no reason he should be talking to me. He should be calling a broker, one of the top brokers, and selling it to them. But for some reason, he just liked me, and it just worked out that, we built a relationship, and I toured the property. His nephew was managing it, not doing a very good job. It was kind of one of those things where he just handed it off to a family member, and they were, really poorly managed. The rents were $200 to $400 below market. It was kind of like the perfect value add deal. So I actually asked him after we closed, which was like a 5-month process. I sat down with him. I said, hey, why'd you sell it to me for the price we bought it for? We bought it for $43,000 a door. It's $4.2 million. And he's like, you know what? I just liked you. I didn't really need the extra couple $100,000. And to me, that was like, what?
Yeah.
That's insane. So the power of relationships is, that's it. It's all about the relationships. So it was just kind of a crazy story, but the mailer wasn't anything special. It was very simple.
And so it sounds like that connection, how did the connection progress? So he responded to the phone call, you get on the phone with him, and then where did it go from there? Did you schedule a time to come out and preview the property? Did you have multiple conversations before that happened? Walk us through that.
Yeah, I think we had 1 or 2 conversations. Like I said, he was out of state, but he had his nephew, his family's all based in Michigan, and he had his nephew on site. So we met with his nephew and we toured the property once, and it just seemed like, there's a lot of deferred maintenance, but overall it was pretty clean. The unit interiors weren't bad. I could just tell that there was so much room in the rents. I think the 1 bedrooms were at $650 and 2 bedrooms were at $750 on average. I've now gotten 1 bedrooms up to $900, and the 2 bedrooms I've gotten one up to $1,200, one up to $1,175, a couple others up to $1,100. So we've got like $400 increases on some of those rents.
Wow, that's crazy.
Yeah.
So let's dive in a little bit to the business structure. How did you structure the deal? And maybe give our listeners, for those that don't know, a little bit of a background, broad overview of syndication.
Yeah, so great question. So syndication, for those who do not know, is what, it's a structure of a deal where we go in and purchase a property, we raise the capital from investors, and they come in as limited partners passively, and they put up the funds. Let's say for this deal, we needed 1.7 million. So passive investors put up 1.7 million. We have a structure to this investment, and on this one, we gave an 8% preferred return based on your capital invested. So anyone who invests money gets an 8% preferred return. What that means is, for example, let's say there's $100,000, 8% on that is $8,000. The first $8,000 the property makes would go to the investors. Anything over that, we have a split, an equity split. And on this deal, it's 70-30. So the first 8% on capital goes to investors. Anything over that, 70% goes to investors. 30% comes to myself and our management team, the GPs, general partners. So that was kind of the split we went on this one.
That's great. And were you able to hit the 8% pref and above?
I hit 10% first quarter.
That's great.
Yeah.
I'm selling the property. Deal.
Oh yeah. I'm selling the property now after a year and a half. If you put in 100,000, you're going to get back, I think, 150. And that's like a 30-some% IRR. So our investors are really happy, to say the least.
Yeah.
We're selling it for 70 a door.
And you bought it for 43 a door.
Yeah.
Goodness gracious.
Yeah.
So let's talk about the value add component. And when you went into that, you bought the property at 4.2. Did I hear that right?
Mm-hmm.
Okay.
Yep.
You raised 1.7. And what did you have to, what were the value add components? What was the business plan?
Yeah, so we raised about $500,000, and what that went towards was replacing uh, 3 of the 6 roofs that were not replaced. So now all 6 roofs are brand new in the past 3 years. We did all vinyl siding. So anyone in kind of Midwest or northern part of the country, we don't use hardy board as much. We use vinyl. And so we replaced this old T111 like wood siding that rots. Replaced all that, so it looks really nice. We did 50%. We raised money for 50% of the interiors, which we still haven't finished yet. We've kind of been slow on those. Well, now we're selling, so we don't really need to do the rest. We repaired and replaced a lot of rotten wood on the balconies, repainted them. We refloored and painted all the common areas. We did the leasing office, the front entrance sign. I repaired and repainted all the carports. What else did we do? A lot of the patios, the concrete slabs in the patios, some asphalt work. That's kind of a majority of it. So we did about 450 to 500,000 in work. And I GC'd it all, and I'd never GC'd a renovation over 30,000 before that. So that was a process.
Wow, I can imagine.
But it went well so far.
And then quickly on the value add component, you were able to raise rents significantly, but what percent of the building was rented? Was it already stabilized?
Yeah, it was like 98% occupied, 99. Yeah, very high because it's a really good area for rentals. I'd say it's like a B minus, C plus borderline area, and they had the rent so low, so the building was always full. And even with increasing rents, I think the lowest we've dipped to in occupancy with renovating units and increasing the rents has been like 93, 94%. So.
And did you have a lot of turnover? How many units did you turn over in the first? I guess it's been a year since you bought it.
Probably 30 to 35%. If I didn't manage it, we would have turned more, and we would have done a lot more, a lot faster, and it would have been run a lot better. I'm not as efficient as a third party management company would be, but I think we turned at this point we've turned over 50% for sure.
So this was, you bought the first 12 units, so total of 24 units. And I believe you bought those at the same time, correct? So the 24 units all at the same time?
Correct.
Okay. And then you moved,
early 27.
And then you moved to the 96 unit. How much time had passed from the 24 unit to the 96 unit?
I think it was like 2 months in between closing on the 24 to under contract on this one. It was like 6 months to close. Yeah, from closing. So that was my first 9 months. Within 10 months, I had done 120 units from getting into multifamily.
Yeah. See, this is what's so impressive, myself included, and a lot of our listeners have in our mind that we've got to get to a certain place in life before we can try to take down bigger projects like this. And what's totally impressive to me is the fact that, I don't know if it was your upbringing or just the way that you're geared, that you were willing to go at it from a very, very early age.
Yeah, I think it was probably, I'm a little naive, so I didn't have any fears. I think if it would have been 10 more years down the road, I may have had more fears, but I'm just so naive, and I just went for it. And I think I got lucky a little bit, but I worked really hard, and just every shot that seemed like a good one, I would take it.
Well, I love this story. I love that it can inspire others. I love that you took action early on in your career and weren't afraid to go big early on. Dane, do you have any questions, any thoughts that you have for David?
Yeah, I had a couple questions. I wanted to know, out of all the things that you do, like in your day-to-day, like from putting the deal together, finding the deal, managing the properties, what is like your favorite thing? And then on top of that, what do you think is like the thing that you're really like the best at?
Yeah, so I think they probably go hand in hand. I love acquisitions. I love looking for deals, talking with brokers, and analyzing. So I've built, from when I started and I was doing these accounting internships, I got really good at Excel. And I started building this analyzer to help me with multifamily, and it's evolved and evolved. And now I actually sell it. If you check my website out, you know, I have a free one that's more simple version. I sell a little more complex version too that helps you analyze. And so I'm a really big numbers guy. I love analyzing the numbers of deals. I think I know that part of the business really well now. And I love negotiating. Love going back and forth with sellers, brokers, the whole transaction process, raising money, lenders, dealing with the banks. I love that aspect of it. I'm not good at property management. That's one of my weaknesses. Asset management, property management. That's something I'm not good at. So I now have a team where I have some business partner and people on our team that are good at that could fill in that gap for me. So cool.
Speaking of your analyzer, I believe that's the way that we connected early on, was me doing some research and looking for some good analyzers out there. And I've purchased your analyzer. I've used it. I've been underwriting deals with it. And to be honest, it's one of the most extensive, but also the most simple. I think there's a lot of analyzers out there that complicate it, especially for guys that are looking to just get into the business. And you've made yours very, very simple. And so, man, I appreciate that. Thanks for putting that together.
Well, I never had the intention of like sharing it or selling it. But when I started to see what other people were using, once I got into this and talked to people, I was like, holy crap, you guys are using the most complicated things. It doesn't make any sense to me. It's not laid out nice. So I just made mine have all those same features, but it's just easily laid out and easy for anyone to use, you know?
Well, and not only that, but if you purchase it, you've included a video that goes through some training, a Word doc that goes through exactly how to fill it out. So anybody that's looking to get into apartment investing or is looking to underwrite deals, man, that's a great tool. So Dave, we need to start winding. Yeah, we need to start winding down things here a little bit. But I've got 3 questions about your apartment investing journey that I want to get a knee-jerk, just gut reaction to. You ready?
Sure, let's do it, man.
Okay, here we go. What is the biggest mistake that you've made during your apartment investing journey so far?
Biggest mistake so far was picking the wrong first business partner. I don't regret it because it brought me to where I am, but I learned now what not to find in a business partner.
Cool. What's the biggest win you've had on your apartment investing journey so far?
I think I would say 2 things. Buying that 96 unit deal really put me on the map. And then my new business partner I work with is probably my biggest win. Just an exceptional guy. He's twice my age. He's 50 years old, and he's owned over 4,500 apartments. But he recognized the hustle and the analytical mind that I have, and we work really well together. So that's why I moved down to Austin, and we started this new business, and we're growing extremely fast. So that was, I think, probably one of the best moves I made so far.
Cool. And then last question for you: what is the best advice you have for someone who's just starting their apartment investing journey?
Know the numbers. You got to know the numbers. This business is based on financials and knowing profit and loss statements and understanding your operating expenses, financing terms. If you don't know that, you're not going to be able to go out and pitch to investors. You're not going to be able to go out and tell a bank, hey, I'm credible enough to be able to do this transaction. And you're not going to be able to get over any of these hurdles that you're going to come across. You've got to know the numbers. It's so important.
Cool, man. Well, I can't thank you enough. I know that you're crazy busy right now, and we had to do this little impromptu with you having to head down to Texas, but appreciate you jumping on. How can the listeners get in contact with you in the future?
Yeah, best way is on Instagram. You follow me at Real Estate Jedi, or just look me up, David Toupin, or you can go on my website, obsidiancapitalco.com.
Cool. And we'll have those points of contact in our show notes. Again, David, thank you so much for jumping on. Appreciate it. And you have a great day.
Thanks, man. You guys are